Digital tokens are everywhere today, from online payments and gaming to finance, digital art, and access to online services. But for many beginners, the word token creates more confusion than clarity. Is a digital token the same as cryptocurrency? Is it money? Is it an investment? Or something else entirely? Most people hear about tokens only when prices are moving fast or headlines get loud. But very few take the time to understand what a digital token actually is and how it works. In this video, we're going to slow things down. I'll explain what digital tokens are, how they function behind the scenes, and where they're actually used in the real world, without hype, technical jargon, or unrealistic promises. By the end of this video, you'll have a clear foundation to understand digital tokens and decide what role, if any, they play in your financial learning journey. Disclaimer. Before we continue, a quick reminder. This content is for educational purposes only and does not constitute financial or investment advice. Digital tokens are a broad and often misunderstood topic. Some are used for payments, some for access, and some for governance or ownership, and not all of them are designed for investing. The goal of this video is to give you a clear, foundational understanding of what digital tokens are, how they work, and where they're actually used, so you can learn without confusion or pressure. What is a digital token? A digital token is a digital representation of value that exists on a blockchain. Unlike physical money or traditional digital balances stored by banks, digital tokens are created, stored, and transferred using blockchain technology, a decentralized system that records transactions securely and transparently. A token can represent many different things. It might represent money, access to a service, ownership of a digital item, or even a right to vote within an online platform. Think of a digital token as a programmable unit of value. Its purpose is defined by the rules written into its code. Some tokens are designed for payments. Others are designed to unlock features, grant access, or represent digital ownership. So instead of thinking of digital tokens as just another form of currency, it's better to think of them as digital tools, each created for a specific function. Understanding what a token is meant to do is the first step toward understanding how it fits into the digital economy. Tokens versus coins. One of the most common points of confusion for beginners is the difference between coins and tokens. They're often used interchangeably, but they are not the same. A coin has its own blockchain. Bitcoin is a coin. Ethereum is a coin. Coins are typically designed to operate as native digital currencies within their own networks, used for transactions, fees, and security of the blockchain itself. A token, on the other hand, is built on top of an existing blockchain. It does not have its own independent network. For example, many tokens are created on the Ethereum blockchain, but they are not Ethereum itself. They follow the rules of the blockchain they're built on. This difference matters because tokens rely on the security, speed, and rules of the underlying blockchain. If the blockchain changes, the token is affected. In simple terms, coins are the foundation. Tokens are applications built on that foundation. Understanding this difference helps you better evaluate what you're using or learning about, and avoids a lot of confusion in the digital asset space. Types of digital tokens. Digital tokens are not all the same. They're created for different purposes, and understanding these types helps you avoid confusion. The first category is utility tokens. Utility tokens are designed to use a service or platform. They might give access to features, allow payments within an app, or unlock specific functions. These tokens are about usage, not ownership. The second type is payment tokens. These are designed to be used as a medium of exchange, similar to digital money. They're meant for transfers, payments, or settlements rather than accessing specific services. The third category is governance tokens. Governance tokens allow holders to participate in decision-making within a digital platform. This could include voting on updates, rules, or changes. In simple terms, they give users a voice. Another important type is security tokens. These represent ownership or financial value, similar to traditional assets. Because of this, security tokens are often regulated and treated differently under financial laws. Finally, there are non-fungible tokens, often called NFTs. These tokens represent unique digital items, such as art, collectibles, or digital ownership records. Unlike other tokens, each NFT is distinct and not interchangeable. The key takeaway is this. Not every token is meant to be an investment. Some are designed for access, some for participation, and some for ownership. Understanding a token's purpose is far more important than following trends. Where are digital tokens used? Digital tokens are already being used in many real-world applications, often without people even realizing it. One common use is digital payments and transfers. Tokens allow value to be sent directly between users without traditional intermediaries, making transfers faster and more accessible in some cases. Another major area is online platforms and services. Utility tokens can be used to unlock features, pay for services, or access digital tools within apps and ecosystems. Digital tokens are also widely used in gaming and virtual environments. Players may use tokens to purchase in-game items, trade assets, or prove ownership of digital collectibles. In decentralized finance platforms, tokens are used for activities like lending, borrowing, or governance, allowing users to interact with financial services digitally. Tokens are also being explored for digital ownership and access systems. This includes memberships, tickets, licenses, and identity-based access, where a token acts like a digital key. In simple terms, digital tokens function as units of access, value, or participation in digital systems. Understanding where tokens are used helps separate real utility from speculation, and that's essential for beginners. Risks and things beginners should know. While digital tokens can be useful, it's important to understand the risks before getting involved. The first thing beginners should know is that not all tokens are investments. Many tokens are created to be used, not to increase in value. Buying a token without understanding its purpose can lead to disappointment. Another key risk is price volatility. Token prices can move very quickly, up or down, often driven by speculation, news, or market sentiment rather than real usage. There is also project risk. Some token-based projects fail, shut down, or lose users. When that happens, the token linked to that project may lose value or usefulness. Regulation is another factor. Rules around digital tokens vary by country and can change over time. Some tokens may face restrictions or legal challenges depending on how they're classified. Security is also important. If tokens are stored improperly or platforms are not secure, users may face loss due to hacks or mistakes. For beginners, the most important rule is simple. Learn before you participate. Understand what a token does, why it exists, and how it's used, before treating it as anything more than a learning tool. Knowledge reduces risk far more than hype ever will. To summarize, digital tokens are digital units built on blockchain technology, created for specific purposes like payments, access, ownership, or participation. Not every token is meant to be an investment, and understanding a token's purpose matters more than following trends. If this video helped you understand digital tokens clearly, take a moment to like the video and subscribe to Prime Capital Insights. This channel is dedicated to breaking down complex finance topics in a simple, beginner-friendly way.